everyone, welcome to the Ichimoku charts.com hourly analysis for the Aussie dollar US dollar FX for Thursday, August 15th, 2013. Well, an interesting market today, quite a volatile trading day today, very dramatic sell-off from around the 91.85 level, extending down to the 90.60 level and through some important pivot point levels. The interesting thing here is that we now have this market oscillating above and below the cloud, and the cloud is looking quite flat, and that can happen sometimes when we have an indecisive market and volatile trading. Previously we saw this bearish breakout down below the cloud, the market then rallying towards the cloud and finding resistance, trading within the cloud, a bullish breakout up above the cloud, a little bit of follow through the first pivot point resistance level, unable to trade up to the second level, and then strong selling coming in. This very large black body really said something about the strength of the sellers in the market at that point in time. If we look at the size of that black body, it's been quite some time since we've seen a body of that size, and certainly if you were long in that market at that time, you would really want to be taking some profits. It was a very good warning signal that the sellers were very strongly in control at that point. If we look at the extent of the range of this candle, it took out 1, 2, 3, 4 candles, significantly almost 5 candles, and did suggest strength from the sellers. We then saw an indecisive candle as the market attempted to rally through the pivot point resistance level, and then failure, with the market trading through the Ichimoku cloud, giving us a bearish market in terms of Ichimoku in the long-term time frame. But now, then late in the trading day, we've seen the market rally with some bullish candles and to rally up through the cloud. We now have at the end of the trading session some very indecisive candles, some small body candles, a couple of dojis, certainly what we'd probably expect come the close after quite a dramatic day as well. The market is technically bullish by trading up above the cloud at the moment. There is a possibility of the market rallying from here. We are trading near the middle pivot point level, and that coincides with the top of the cloud, so there is a possibility of that holding as very solid support for this market. So we want to watch this market as we see early trading around that area. If the market does sell off, and here now we're seeing the market as the session is continuing here, we are seeing the market trading within the cloud. So the potential support extends down to the 91.18 level, and if we do see strong bearish activity down through there and a bearish close below there, the first pivot point support level may come into play down around 90.71. It should hold as fairly strong support, coinciding with an area where we saw a rejection from for today's trading. There is a possibility of the market extending back down to the 90-cent level. That should hold as very solid support, a round number. But if we look at the distance between the pivot point levels for today's or tomorrow's trading, they are quite large, and I doubt that we will see the market testing down to that level in one go. There is a possibility, but I don't think so. If we do see the market trading down to this pivot point level around 90.71, we should see some buying coming in. But let's not preempt the market. The market was trading up above the cloud. At the moment we're within the cloud. Possibility of the cloud holding a support and the market bouncing off this level. Now we have some minor resistance up around this 91.50 level, 91.47 area at the top of this small congestion area, and if we do see the market trading in a bullish manner up through there, we could see the market testing up to the first pivot point resistance level, which is around 92. So we could be in for some fairly volatile trading today, although as I've mentioned, we can't preempt the market. We don't know exactly how it's going to develop, but the market's also trading up above the Kijun-sen and the Tenkan-sen, so it's bullish in the medium and fast term timeframes, but that Kijun-sen is pointing flat, and price action is now being attracted back towards there, and that's within the cloud, so strengthening the amount of support that we're seeing, or that is possible within the cloud, so strong support there. Looking at the Chikou span at the moment, that's within the price action, so not really giving us any clues here. It's really telling us that there is a lack of momentum by either the buyers or the sellers in this market, and it's certainly not supporting anything that we're seeing with the market trading above the cloud, and is actually supporting where the market's trading with this candle that's currently developing within the cloud, giving us a neutral market. Now in terms of Fibonacci, with this first time frame trend being down at the moment. Looking at some of the levels, we have the 23.6% level immediately below the bottom of the cloud, so that may be an important level if the market does trade down to the cloud and just through it. That's at 91.15, and the 38.2% level is at 90.96. Looking at the Fibonacci retracement, and the 38.2% level is below the cloud as well, 91.13. So we could see the market just poke through there and find support, but we're not trading anywhere near there at the moment. The 50% level at the moment is at 91, coinciding with that round number, so could be very solid support down around there if the market does trade through. Now, in terms of patterns in the market, and here previous to the current candle that's developing, we have seen the market form a little pennant type pattern, and here we had the prior trend leading into the pattern, the small tight price action with this pennant. We are at the moment trading down below the bottom barrier. If we see this current candle close down below there and significantly in a bearish manner, that will be a completion of that pattern and will suggest downside in this pattern. If we do see the close down below the pattern, that will mean that it has acted as a reversal pattern. They don't tend to, they tend to be continuation patterns, so the more likely reversal would be to the upside. So let's wait for that. We may not see the market close down below here. At the moment this current candle isn't complete, but it certainly doesn't look as though the market will trade to the upside. At the moment it looks bearish, and we could have a close down below there. The potential target is just the width of the pattern projected down, so it gives us a target roughly down around here at the bottom of the cloud, and that falls into line with what we're seeing with other forms of analysis, that we could see very solid support down around the anywhere through the cloud down to the bottom of the cloud. If we do see this candle develop higher and close back up within the congestion area, we may need to adjust that pattern, and if the low stays around there, we could have equal lows in the equal troughs within the pattern, and a downward sloping upper barrier, making it into some sort of a descending triangle. That may be significant, and that may suggest that there could be a breakout to the downside, but we can't preempt what the market is doing. As I've mentioned, if we see a close down below here, it will mean completion of the pattern as a reversal pattern, and a very minor target level down around the bottom of the cloud. But as I've mentioned, in terms of Ichimoku, with the candles that have completed trading, we are trading up above the cloud, so technically bullish in that long-term time frame. But with this candle, it is currently developing, trading within the cloud, so as it's developing a neutral market in the long-term time frame, we are trading above the Kijun-sen and the Tenkan-sen, so bullish in the medium and fast-term time frames. That Kijun-sen is flat, price action is being attracted back towards there. Very strong support around the Kijun-sen at 91.25, and if we do trade down through the cloud, potential support down around the 91 level, and strengthening that 91 support level from the Fibonacci technique and the round number. But really we do need to watch how the market behaves around this area. The middle pivot point level is crucial to this market, how it opens here, and then certainly down to the bottom of the cloud around 91.17.